Welcome to the StockOptionAssassin.com's weekly video update for swing trading options. We're going to take a look at some monthly and weekly charts, and then we'll kind of go into a couple trades that we're looking at with our members. And what I wanted to focus on, since we just ended the month of May last week, and as most of you know, is horrendous. June is starting off to look even worse. Is I wanted to kind of just look at pure price action, no indicators for now, and no moving averages or anything, and just look at pure price action. And one of the best tools you can use is Fibonacci retracements and extensions, and let's kind of go through that now. So first of all, I have a monthly chart of the SPX up, and you can see, this goes all the way back to 03. But what I want to focus on is well, first I have this little pivot here that, you just kind of draw that. Interesting that this 08 pivot, or the pivot kind of bounce we had in 08 before the big crash, is kind of right where we came into. So it's really no surprise that we kind of ran into that on the monthly chart. So anyways, Fibonacci wise, let's start with the March 9th, March of 09 lows. We kind of had this move up. We had a really nice leg here. We retraced to the 382, very, very typical. We broke back above that, and anytime you kind of have a pullback and you break above it, there is a really good chance you get to the 27 extension. We hit that perfectly. That ultimately failed. We came back down. You can see that we had this huge drop, but kind of closed back above here, and then we ultimately kind of pulled back. We broke back out above again, and now, it tried to break out, ran into this pivot, and I thought, maybe we have the juice to get back up to the 618 extension. And you can see how this first leg up, the golden ratio extension of that leg would get right almost exactly to the previous highs here. So again, the golden ratio playing a big factor. So I'm leaving this on here, this monthly chart from the March 9th lows, and this is to April of 2010. And I'm going to leave this on here, and ultimately I think we're going to be pulling back at least to 1220, and I think it's going to happen over the next few weeks. I know we're oversold, but until something positive comes out of Europe, or the Fed announces QE3, which is very possible. They are meeting later in June, so I think the first few weeks of June, it's not going to go straight down, but I think ultimately we're going to retest 1220. And if we kind of put in another fib from, this is the October 4th lows of 2011 to our high, you can see that kind of coincides. You have a 618, let me zoom in just a little bit. You have a 618 retracements around 1207, 1208. So this is, I think this is going to be a good support area, and I think we are going to get there, and I am expecting to get there by June. So how do we play that? Well, first of all, let me show you a trade we took that we were actually still in. We took this on Thursday last week. I'm going to switch back to a daily chart, and we took this with our members, and I am going to kind of go, we took it in Pfizer, and I'm going to bring on our, we use a lot of moving averages, and we use the TTM squeeze indicator with our trading here. You can see in Pfizer, we had kind of this head and shoulders pattern. The neckline started, it started to break, and let me get my right tool in here. Kind of had this move. We were kind of consolidating here, a little bit of bearish consolidation. We entered this trade basically on this day, right in this area. Zoom in a little bit, and you can see what started happening was the squeeze indicator. You can tell the bearish momentum was kicking in. It was going from positive to negative. The red dots indicates that it is in a squeeze, and then once this started, the bar went from red to yellow, showing it was kind of holding here. So I thought maybe this thing will actually turn around and go positive, and then the next day it went back red. So we decided to take this trade. The market started to fail. This one-day pop put us up 40%. We took half profits in that, and I am looking for a move ultimately down to about the 200-day moving average, which is this line, and this would kind of coincide with this pivot low, which is slightly slightly above that. But basically around 2080 is where I'm looking to take full profits on that. So we are in on the bearish side. The other thing we did is we started to nibble on some USO, and I'm going to kind of explain why. USO, I mean, obviously oil is just in a complete downfall. You have the rising dollar pushing commodities and stocks down, as well as low demand from jobs reports and Europe, part of Europe being back in recession. So this was sort of a contrarian play, and we are sort of nibbling on the way down. If we actually get to this double bottom, I think this is a good entry for you guys, and I'm going to call it around 29.50. I would be looking, depending on how long it takes to get there. We bought some July calls already, so if we get a good bounce, we'll take those off the table and just kind of reassess. But if we do get a little bit of a bounce, you could reshort oil. What's interesting is when you look at the dollar commodity type space, if you look at UUP was actually slightly, not bearish, but it slightly pulled back a little bit. You have this, starting to lose a little bit of momentum here. If you look at the squeeze, we're pretty extended, far away from the 13 EMA. This is the 13 EMA, the 20, 50, and 200 simple moving averages. So I think, a dollar pullback, and this is partly why we got on oil. Oil was down 3%, and the dollar was actually pulling back. So I was kind of looking for a snapback. So if the dollar does pull back to the 13 EMA, then oil would get that pop, and we would take take some profits in those calls that we purchased. But as far as right now, as new trades is, I'm not setting anything up. We're going to be watching this. It'll be interesting to see where we open on Monday. If any sort of news comes out of Europe that will help the euro, and remember that euro is just kind of falling off a cliff here. I would actually be interested in shorting the euro via FXE. If we can get a pullback to about 125 on FXE, I would pull the trigger on a small position of puts. And probably I'd have to reassess at the time, timing, but I'm probably at this point looking at July puts, and then you could even maybe add some more at the 126 area. So that's kind of what we're looking at this week. And let me kind of show you the dollar chart again. And this is the actual futures chart. And let me just clean up all this stuff off here. One thing I want to point out is that if you are in cash, you are making money. And this is very important to understand. I know, we missed some trades this week. We were trying to get in on TLT, and it popped without us. So we did not make any money on TLT. We're looking for a pullback here. You can see where I had my targets in here. We never got that. It went without us. We missed this trade. IWM, we were looking for a move. I mean, we missed this by maybe 50 cents or a dollar. We were looking to reshort IWM. We missed it. So what that means is we're sitting in more cash. And if you look at the dollar chart, your cash is making money. Your account's not growing, but your cash is making money. And that's very important for people to understand. You don't need to be in the market at all times. We have our short trade. We have our long trade. I think we're set up well. We're on a really nice, I think 13 out of 14 trade win streak here. There's no need to rush this, especially when the markets right now are barreling through levels. When you look back at the SPY, the market just barreled through the 200-day, and you're starting to get a reacceleration of momentum here. So you need to be patient. Don't let this thing fall. See where it lands. If you want to go contrarian, look at 1220, which is about 122 on the SPY. Take a small trade long. Find stocks that are holding up well. One thing I'm going to be stocking is Amazon. Amazon pulled back to the 50. You had this huge gap, and ultimately, I think you'll probably retest this 196, which would be gap fill. But if you want to nibble here at 201 and then nibble here and look for reversion back up to the 20. By the end of June, if Amazon is down at 196 here, I would be backing up the truck and just looking for this thing to break out. And I would be looking for like August, September, maybe even December calls. So This is something you keep on the radar. You also have this serious trend line here, which by the time this thing does get down here, you're going to have gap fill. You're going to have this this very strong trend line support here, and again, that's around 196. So that's all I got for right now. You guys be patient. Let the market fall. If you're in your shorts, I told you where you can look to take things off. You need to take profits along the way, because at any day, the government or Europe, some news can come out and that the market's going to have a huge rally. And you are going to see some face-ripping rallies over the next couple of weeks, but ultimately, you know where I think we're headed. That's 1220 on the SPX, and you guys have a great weekend.